Let's get the read from former Chief of Staff to Paul Ryan, Dave Hoppe. We have market watcher Heather Zumarraga and USA Today Congressional reporter Eliza Collins. Now, Eliza, we're waiting to hear what the Chinese would do in response. Most people seem to think if this is contained even 34 billion to 34 billion, it's so small in the scheme of things that both countries, the world, can live with that. Do you agree with that?
Well, I think we really have to wait and see. Certainly, if people are not being hit in their pocketbooks, it's not going to affect them. You know, in the midterms, Republicans are worried about what this will do. If people aren't seeing this, you know, when they go to the store and a gallon of milk costs more money, then it is likely that it'll have less of an effect and the markets probably will stay higher.
Dave, what do you think?
Well, it really is not a question of the stock market. The stock market has taken some of this into effect already. It is the effect on individuals, retailers, small businesses who are trying to trade, farmers especially. So we have to look there. That's where you'll first see the problems, is if the farmers are getting hit badly by this because the prices are going down. The non-tariff barriers you mentioned earlier, Neil, in the report, are ones that can be used very painfully for Americans and American retailers, and people are trying to sell. And so I look at those as really a terrific problem to deal with, not a minor problem, although it's not the tariffs that some are worried about.
You know, it is sort of like a passive-aggressive way, Heather, to sort of stick it to American companies without formally interfering in the process with sanctions or tariffs of their own. But, you know, obviously to Dave's point, that they can be as damaging, if not more so. What do you think?
Yeah, I think we could stand, if this escalates to a trade war, to lose more jobs than we would gain protecting domestic producers and manufacturers here in the U.S. But I think the markets are up today on the backs of some of the auto tariff talk quieting down. There's been a more subdued tone from the U.S. On this zero tariff solution that's proposed, saying, hey, EU, if you stop levying tariffs on our cars, then we will stop threatening or soften our stance, threatening tariffs on cars coming out of specifically Germany. Germany really stands, I think, to take a big hit on the backs of these auto tariffs, which could be more than 3 times the amount of steel and aluminum tariffs. So if this zero solution is implemented, meaning no tariffs on either side on cars, then I think that's a big win for the markets. And you look at Ford, GM, and Fiat today up on that news as well.
You know, on that point, Eliza, I mean, Germany has already indicated, and courtesy of the IMF, that it's going to put a pinch certainly on their growth, likely to be all of 2.2%, down sharply. Angela Merkel has said that she thinks this is going to reverberate, you know, and hit the global economy, and the tit for tat is going to get worse. What do you think of that, this idea that this is spreading and it might already be out of control?
Well, I think they're waiting to see what happens. Again, the zero tolerance policy certainly would tamp that down. But if that's not the case, if it does go, I think the global economy likely will be hit. Can talk definitely here at home with midterms coming up and lawmakers going in. If people are being hit, it goes back to that. If, you know, manufacturers at home are being hit because tariffs abroad, that's jobs. That's people who will go to the polls and vote, and that's concerning for the people in power right now.
You know, I do get worried, Dave, when I hear that farmers have to be told, be good patriots and absorb this. You know, that's a tough sell.
Easy,
for guys who are
easy for someone else to say.
Right. I mean, and all of a sudden, they're the ones who have to absorb this. And they, of course, been on the front lines of this because everything that is their lifeblood trades on the futures markets, and the futures have tumbled for a lot of the goods they sell. So they're in a real pickle here. And I'm wondering how long they can sustain that.
Well, not very long, because farmers do live crop year to crop year. And so if the futures go down the way they have precipitously and we get shut out of the soybean market, things of that nature, it's going to be very, very hard on farmers here in the United States. And there's no necessity to do this. There's other ways of handling this. The sort of Gatling gun approach that the Trump administration has taken, instead of looking at China and the problems with China, whether it's trade and technology, whether it's stealing IP, whether it's playing around with yuan. If the United States would work with other countries to make changes in the WTO to make China an honest player, I think we could have the rest of the world with us. But instead, we're using a Gatling gun.
China should not have ever been accepted in the WTO in the first place. It's playing under a different set of rules as more of an emerging or developing economy versus a developed nation. And it's not operating on a free market system, which the other countries and the WTO are.
So what would you do, Heather? I mean, would you update the rules, say, all right, now you're a modern superpower economically, and you shouldn't play by those rules? I mean, I don't see the behavior that Chinese really changing much. But obviously, not that the markets, to Dave's earlier point, are telegraphing anything that is apart from what's happening in the real world, the economy and what have you, but they seem to be dismissing these anxieties.
Oh, yeah.
And I wonder about that.
The markets are dismissing the anxieties because the markets don't think, I think, A, that a trade war will result. I know the markets move on every rumor coming out on trade that we hear, but also the jobs data. 177,000 print today, ADP printed was below 190,000 expected. But overall, the economy is doing very well. 3.8% unemployment is great, and we're embarking on second quarter earnings starting here in a week or two. So I think in July it'd be tough to tell investors to go out and buy this market, but I don't want to be caught short either until I see what happens with trade.
You know, Eliza, we were told last week by the Commerce Secretary Wilbur Ross that the president isn't going to judge what movements he makes on trade or concessions based on the stock market, but he is very attuned to it. And I'm wondering if it were to go into a sustained fall, not today, of course, we're at session highs, that he is paying more attention to it than we know. What do you think?
Well, I think with President Trump, we never know what President Trump's going to do until he does it. That's A, but he is very attuned to it. We see the president, when the stock market is high, he lets people know. I imagine he won't be saying publicly if it drops, but he's a businessman. I think he is very aware of what these results and how this goes forward moving into trade.